Hey guys, welcome to the Max Invest YouTube channel. In today's video, I'm going to be discussing a few different things. The first thing that I want to discuss is Crypto Cobain's view of what a future bear market could look like. After that, I want to talk about a new entity that's running a Chainlink Oracle node, and then I want to talk about some recent bits of news regarding Polygon. Of course, if you enjoyed the video, remember to like and subscribe to the channel, follow me on Twitter, join the Discord, and remember, nothing in this video is financial advice. So the first big thing that I want to talk about is Crypto Cobain's view of what a hypothetical future bear market might look like and why I found this post quite interesting. Crypto Cobain is someone on crypto Twitter with 500,000 followers. Now, he's been in crypto for a very long time, and he's been in crypto since before 2013. Crypto Cobain essentially made a tweet thread that was outlining what he believes a future bear market might look like. It's important to note that he clarified that this would probably be the worst case scenario, and this is probably the hypothetical worst bear market that we could expect. So I did find this post quite interesting to read through and break down what some of his thoughts were. Now, the first thing that he said is 95% of these trendy alt L1s will fail to maintain ecosystems, and anything that will struggle with funding will disappear. So, of course, this is one of the things that I believe myself. Right now, a lot of the layer 1s are going very, very well. We can see Avalanche pumping, Solana pumping, Elrond pumping. However, the problem with a lot of these layer 1s is I don't think they will live that long. There's so many new layer 1s and so many people speculating on them, despite a lot of these layer 1s not even having much of a product, such as layer 1s like Cardano. In my opinion, a lot of people are investing in these layer 1s because of pure speculation, and as a result, a lot of these layer 1s will cease to gain any adoption and they will probably die. I do also think that a lot of layer 1s will struggle to compete with Ethereum on settlement, and they may need to turn into a layer 2. Of course, this is why I like to invest in Ethereum, because it's not one of these trendy alternative layer 1s, it's a proper well-established project that is doing a lot of good stuff and has a very, very strong roadmap. So this was one of the first things that I liked about Crypto Cobain's tweet. He then went on to say that Metaverse and GameFi coins will go to zero. And the reason for this is because they simply won't have the funding to actually do what they want. Now, I actually do agree that the majority of these metaverse coins may go to zero, and this is because a lot of them are really fueled by speculation. They've recently been hyped up by the Mark Zuckerberg announcement, and a lot of these will probably not deliver a good product and go down over time. So I do agree with this. However, I do think there'll be some very good metaverse and GameFi projects, but the space does seem too overhyped right now. Crypto Cobain then goes to say that tokens that require constant emissions to maintain operation will potentially collapse, and this is one of the things that I agree with as well. Essentially, you have cryptocurrencies like Solana that need to print more and more SOL in order to pay for consensus. Solana emits $4 billion worth of SOL every year in order to pay for consensus. However, they receive only a couple million every year in fees. Of course, what's going to end up happening is if Solana goes into a bear market and its token drops, nobody will speculate on the token anymore, and this will make it quite difficult to pay for consensus, which could mean the network could crash and cease from operating. This is something that I've talked about in previous videos, and it is something I believe is a potential outcome. The next point that Kobe makes is he says that YouTubers will keep making the best altcoins for next month videos, and crypto YouTubers will continue to be very, very bullish. And the reason that crypto YouTubers will continue to be quite bullish is because it's best for their business model. Everyone wants to click on a YouTube video if the YouTubers are remaining bullish, and this kind of results in YouTubers giving people false signals. Of course, on this channel, I'll try not to do that here, and I'll try to continue sticking to the fundamentals. However, a lot of bad crypto YouTubers are out there, and they definitely could continue to try and pump the market despite a dump happening. Crypto Cobain then says that good projects could fall 90% and great projects could fall 80%. 80%, and I do believe that this is a potential outcome in the very, very worst case. However, I have already outlined that I do believe the majority of crypto projects will not go through an 80 to 90% bear market. I do believe that we might see Ethereum fall 50 to 70% in the future. However, I don't believe in a bear market lasting for 3 years and cryptos going down 90%. Kobe obviously outlined later that this is the absolute worst case scenario, and I do believe that do agree with him that this is a possibility in the very, very worst case. However, we'd probably need to see a macroeconomic liquidity crisis and a 50 to 70% crash in the stock market as well for something like this to actually occur. Kobe then goes on to say that founders that ever or often tweet about their token prices have got the wrong incentive structure and these projects will die, and in my opinion this is a very, very big red flag, and I don't like to go for projects where founders ever tweet about the price. Kobe then goes on to say that essential projects that have spent time critically thinking about how to structure their product will survive. He says projects that are built to make sense in 10 to 15 years will continue to attract capital and talent. Of course, this is where I structure my investments and what I like to invest in. My 4 biggest investments right now are Ethereum, Chainlink, the Graph, and Polygon, and in my opinion, these projects are essential and they're built to survive for many, many years. Of course, one of the problems with Chainlink right now is a lot of people get quite frustrated that the team is selling their tokens. However, when the team sell their tokens, they're building up cash reserves. Of course, if a hypothetical bear market came, the Chainlink team would have a lot of cash reserves that they could use to actually begin to spend on their product. They could keep spending on Chainlink and continue to develop Chainlink. Of course, some of these other trendy layer 1 coins will probably not have this capital, and they may end up going to zero if they see a 90% token price reduction. So I do feel very comfortable with my projects that I'm holding, and if a hypothetical bear market ever came, I do think that my projects would quite easily be able to withstand this bear market. Of course, I know a lot of you agree with me, and most of the people who watch this channel invest in the same couple of essential projects that I like to invest in. So that brings us to the end of Kobe's thread, and I found it quite useful. Now, I don't agree with him on this thread that we're going to see this deep of a bear market. I don't think the bear market will go for 3 years, and I don't think we're going to drop 90%. However, it's definitely important to keep in mind some of these messages that are made by the crypto OGs and look at all possible scenarios. Now, one big bit of news that I want to talk about is Matrix, which is the largest futures and options exchange in Argentina, is launching its own Oracle node. Of course, this means that yet another company is launching a Chainlink Oracle node, and in this case, it's a very, very big company, the largest futures and options exchange in Argentina. Of course, what launching a Chainlink Oracle node means is that Matrix is putting more data on chain. They're essentially putting their own data onto the blockchain in order to earn some revenue. Of course, the data that they're going to be putting on chain will likely be financial data. It will be financial data from Argentina and anything about the stock market, the futures market, and the options market over there. And of course, smart contract developers may want to use this data. Every time a smart contract developer uses this data, Matrix will be paid in link tokens, and this is very, very good. Of course, in the future, I do expect a lot of different companies to be coming on chain and a lot of different companies to be running Chainlink Oracle nodes, so it is great to see that Matrix are getting a bit ahead of most of the other companies and already starting this up. Definitely some good news. Now, the last thing that I want to talk about is Polygon. Essentially, Polygon just announced that they acquired Mir Protocol for $400 million, an absolutely massive amount. Now, Polygon essentially said that they were going to be spending $1 billion on zero-knowledge roll-up technology, and this $400 million is 40% of that $1 billion. Polygon acquired Mir Protocol in order to develop a roll-up with them, and this roll-up is going to be called Polygon 0. Now, the reason that Polygon wanted to acquire Mir Protocol is because they have some very good technology. Essentially, Mir Protocol have a revolutionary way of generating ZK proofs. Now, a ZK proof is essentially a proof that the transactions happened off-chain. So with a ZK rollup, they'll compute the transactions off-chain and then send a proof of this computation down to the main chain. Of course, Mir Protocol have a very cool way of generating proofs, and they have a technology called Plonky too. Now, this technology sounds very weird, however, ZK plonks are actually quite common. I'm not sure why they're called this. Essentially, what Plonky 2 can do is it can generate recursive proofs in 170 milliseconds. So this means that when a ZK rollup needs to generate a proof, it's going to happen very, very quickly, which increases the overall speed of the rollup. What this is going to mean is it's going to be very, very easy for the transaction to get finalized in a very short period of time, which is something that is quite important. Now, the next thing about Plonky 2 is it's only 45 kilobytes to actually generate the proofs. Now, if you use computers at all, you'll know that 45 kilobytes is a very small amount. What this means is that when the proof is generated and posted to the Ethereum layer 1, it's going to use up not that much space. Of course, this is going to free up the layer 1 and it's going to bring the cost of transactions down, which is always a good sign. Anyway, that's the end of the Polygon news. They just spent $400 million to start developing a new rollup, and this makes me very excited for their future. Regardless, this brings us to the end of the video. If you enjoyed the video, try help me get to 1,000 subscribers. We're really pushing to get to that mark and it would be much appreciated. Thanks for watching the video.